Welcome to the Corlin Economics Report, a weekly look at financial and political topics relating to asset-based investing. Guests on this program pay no fees to appear, and guests and hosts disclose any equity interest in companies profiled. Now, the Corlin Economics Report.
Welcome into the weekend edition of the KE Report. My name is Corey Fleck, and I'm your host for the first hour. Al Corlin is back with KER Politics in the second hour. I want to wish, again, everybody in the U.S. a very happy 4th of July. Everybody in Canada, a very happy Canada Day. It was a choppy and broken up trading week thanks to those two holidays, but there was a significant amount of actually political news and, the job numbers, too, that also came in at the tail end of the week. We're going to start off this weekend edition for the first two segments, focusing more on the precious metals with the company update coming at you in the second segment. But this first segment, I am chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. And Jordan, I want to talk about what we're seeing compared to silver and gold, the ratio there. We've been seeing silver actually start to recover a little bit compared to the gold price starting in about mid-March, but that started to, again, kind of peter off. I don't think anything significant in the way of true breakdowns or breakouts, but it just goes to show that this continues to be a very choppy back and forth market without a whole lot of direction in terms of positive directions the way that the precious metals are going. Can you first comment, though, please, on the silver-gold ratio and what you're reading into it?
Well, Corey, I think the silver-gold ratio or the gold-silver ratio, whatever way you want to look at it, gold bulls and bugs have been hopeful because they've been looking at these charts. And the ratio made, you could say it made a peak in favor of silver, or it made a bottom in favor of silver, whichever way you're looking at it. Some of these charts, they look at that and then they're trying to look for similarities to the 2016 bottom or the 2008 or the 2001 bottom. You know, you really have to take when you're evaluating markets technically and you're looking at sentiment and all these other factors. You have to take in these other factors. One thing that amateurs do is they look at a chart and they say, oh, well, this looks the same as it did, when there was this major bottom here. So, I mean, it's going to repeat that and be super bullish. I mean, that maybe that's the case, but you really need to evaluate other factors. With the gold-silver ratio, I mean, in late 2001 or early 2002, somewhere around there, it turned in favor of silver, as we know. But look, at that point in time, stocks were in a bear market and the Fed was cutting aggressively. And the gold stocks had already turned up and made a big run. Gold had already bottomed and silver was lagging a little bit. But after late 2001, it was on its way. And so that's completely different from what we have now. The Fed's hiking. The stock market is not in a bear market. It's still rising. And precious metals are below the long-term moving averages now. So, I mean, that's completely different than what we had in 2001. Yet, I've seen some of these charts where, and even professionals were putting out some of these charts in the last couple months, were essentially saying, well, this looks very similar to 2001 or 2002. So I don't see that. Maybe the gold-silver ratio has peaked, whereas, gold relative to silver has peaked. I don't know, but I don't think it's that important yet. Because what silver normally does is it usually lags, and then when gold gets going, it really leads. And I mean, it's possible we could see that again, but it's possible that we could see something different this time, where maybe silver, because I'm looking at, if you look at silver, you can draw a triangle going back to, I think, the early 2017 lows. You can draw a triangle from there, and then I think it was at the end of the first quarter, it made a peak right above 18. So you can kind of draw a triangle from there. And silver is really, I mean, it's rallying from the bottom of the triangle. But if this rally fades over the next couple months and precious metals roll over again, silver could have a strong breakdown at that point. And what I'm trying to get at is I don't know for sure if this ratio has bottomed in favor of silver. It's possible that silver, in the months ahead, could have a breakdown and another move lower, and so I don't. That's why I don't want to get that bullish on the ratio yet, because the chart for both gold and silver in the bigger picture, they both look bearish. So the fact that maybe the ratio favors silver, that doesn't change that the charts for both are bearish until something changes. I think the key is you really need to focus on just the price action for gold and silver. You have to get that down before you look at the ratio. That's my belief here and now. I wouldn't read too much into the ratio yet. I would focus more just on the charts of gold and silver by themselves.
Well, one key thing that you said there, too, is that a true bull market is when silver is outperforming gold and they're both moving up. It's not when one is moving sideways and the other is moving down, or one is moving sideways and the other is moving only slightly up. We need to see a more sustainable run in both of these metals. Let's also talk about the gold stocks, though, because, again, some of the bulls are saying, look at the gold stocks. It's outperforming gold as gold has been moving down. But when you actually look inside some of these ETFs like GDX, GDXJ, yes, they've been looking pretty good, but we haven't been seeing overall strong breadth in terms of a number of stocks moving these ETFs higher. Can you comment on this, please?
Yeah, and that's very important. And first, I mean, I don't want to say the bulls are wrong. It's just that with the strength that we're seeing in the miners relative to gold, that is bullish, but it's bullish here and now. I mean, it doesn't necessarily mean that miners are going to begin this massive 6-month move higher. I mean, I don't think that's going to happen. I really hope it happens and I'm wrong, but it's really only bullish over the next couple weeks or the next month or so, or for as long as this rally looks like it's going to run. And we're looking at GDX and GDXJ, and their GDX is back above its 200 and 400 day, which is good. And GDXJ is back above its 200 day. So that's good. But the GDX decline line as of yesterday was still weak and below, a good distance below its 200 day moving average. So even though the gold stocks to gold, GDX to gold, is giving us a positive divergence, we aren't seeing the same thing in the advanced decline line. If we were, that would be really positive, but we're not. So that's kind of a negative confirmation per se. And if you look into the holdings in GDX, and let's compare it to the Huey, because the Huey has been so much weaker. Well, there's 6 stocks in GDX that have been really strong, not just relatively strong, but strong as in, if you look at their charts, they look like they're in a bull market, and that's about 35% of GDX itself. And so those stocks have been strong, and they've been preventing GDX from really weakening as much as we normally expect. Now, if we look at the Huey only has 2 of those names, so that's why the Huey has been so much weaker. And what the advanced decline line reflects that the rest of the index is looking very weak. If the advanced decline line was a lot stronger, that would be telling us it's more than just these 6 stocks that are strong. So, I mean, that's the concern. And, I don't think miners, I mean, we've been talking about a summer rally or setting up for this rally, and gold went a little bit lower. I think it dipped below 1240 for an hour or two. But, it looks like now we're getting this rally, and it's probably going to last, throughout July. Maybe it'll go into August a little bit. But there's going to be, I mean, this strength and the rally that we're seeing now, it's going to hold for at least a little while. However, Corey, when we get to the end of the summer and we get into the fall, the issue, I think, is if the gold price does not reclaim 1,300 or 1,310 and that strong resistance, if it's going to rally up there, maybe roll over again. If it goes below 1,240 again into the low 1,200s, threatening a move below 1,200, these strong stocks are probably going to start to get hit. Of course, the weak stocks are probably going to get hit again unless they're extremely oversold already. And so that's the negative combination there, where you could start to see these really strong stocks start to get hit. And that's when GDX could decline, in a much sharper way that we haven't seen for months and months. Obviously, I'm looking out several months down the road, but that's what that's why I'd be concerned, because ultimately they're really going to follow gold. Gold is going to tell the story. until gold can reclaim that major resistance at 1,300 to 1,310, then I would not read into the strength that we're seeing being bullish just beyond the next month or so. Now, however, Corey, if we do see gold go down to 1,200 and these stocks are still holding up strong and GDX is not, it's holding up, it continues to hold up really well, then that would be another sign of encouragement, I guess. So that's how I see it here and now with respect to the miners and their strength against gold. I mean, yes, it's significant here for the days and weeks ahead, but as we get into August, we get to the end of summer, a lot more needs to be proven if we're going to say it's bullish beyond that point.
Absolutely. I agree with you, Jordan, and I don't want us to come off too negative for the metals because I do think it is still encouraging that overall we're holding up at some reasonable levels for gold. Silver has not really broken down. Hopefully it doesn't break down, but some of the stocks are doing okay. It's still a selective market out there. I want a quick comment before we wrap this up from you regarding the copper chart and potentially the platinum chart. Platinum breaking down much more than copper, but copper has now broken that 290 level. What about the overall weakness that we're seeing in both these markets?
Well, Corey, what's going on with copper is pretty interesting because we kind of had, some people like to say from false moves come fast moves. So when you kind of see a breakout or a strong move that completely reverses course, it's really significant, and we've kind of seen that in copper, whereas 4 or 5 weeks ago, it was very close to breaking out to a new high. It had a really strong weekly close, a really strong week 5 weeks ago, around 330, and since then, what happened is it completely reversed course in the last 4 weeks, and so the close this week, to me, looks like it's going to be at a new 52-week low. So that is a real violent reversal, and that means a significant top is probably in place. And I think with the dollar strength that we've seen, I mean, that's certainly negative for emerging markets. China's market is selling off really aggressively. So, the economic side, that's not my expertise. But looking at the technicals, we have seen probably an important peak in copper, and that looks pretty ugly. And platinum is really interesting because it is a precious metal, but it's been really weak. And it here and now, it looks like it's on the cusp of going below its late 2015, early 2016 low. And some people like to say platinum leads gold. I'm not sure about it. I haven't looked into that often. Looking at both of these, Corey, it just it's not good for the metals market as a whole. I mean, we already know that gold has kind of rolled over. Silver hasn't been able to break to the upside of its triangle. It's just looking at and then factoring in this vicious reversal in copper and then platinum, which could be leading everything to the downside on the cusp of a new low. The bigger picture here does not look good for the metals complex. Unfortunately, that's all we can say here and now. We're probably going to see lower prices in the months ahead before something changes.
All right, there we have it. Jordan, I always appreciate your comments. It's great chatting with you every week. And again, not trying to throw too much cold water on the gold and precious metals bulls, but right now the market continues to be under a bit of pressure, but commodities in general, they are under pressure as well. Jordan, great chatting with you. Thanks for joining us this weekend. Everybody stick around. I'm going to be right back.
Al Corlin's firm, A.B. Corlin and Associates Incorporated, provides consulting services to public companies on matters of regulatory compliance. To find out more, follow the link from www.kereport.com. The Corlin Economics Report will be back after this brief timeout.